first is I'll pass it over to my friend Talks to give us a presentation and go over how the program operates. And then once he's done with that aspect, because that's a very crucial aspect. Once he's done with that, we will now go over how we come in to find properties for your clients and how you also get paid from referring your clients to us. So over to you, Talks. Thank you, sir.
Sure, absolutely. Um, Thank you, Damola. As he said, it's very regulated over here. So just he mentioned that he doesn't have the licensing or Luvanex to do mortgages. It's the same. I don't have the licenses to do the real estate. They do that so that they make sure that we're very focused on what we're doing to make sure we provide good service to all of you. So yes, as I'm sure most of you know, as people keep abreast, there are many types of mortgage loan programs in the United States. A lot of them are meant for residents and US citizens. But there is, and this started several years ago, the opportunity now for foreign nationals to buy properties here and get, mortgages. So in the past, a lot of people would just come and buy an entire house for cash, but of course, that's a lot of money. But now you're able to get a mortgage. So I want to go over this loan program with you, which now, thankfully, a few more banks than before are actually allowing this. I'll go over that with you. Thank you. I was just about to ask for that. Great. Thank you, Jessica. All right. So we're just going to quickly talk about the Foreign National Loan Program. So it goes by different names, but basically it's all the same. Yes. You're fine. All right, we can so yeah. Basically it goes by different names, but the bottom line is it is for foreign nationals. So if you have someone who is a US citizen that wants to buy here, yes, they won't be able to take advantage of this program. They'll have their other programs for them, which will be slightly better anyway. But this is strictly for foreign nationals from any country, not just Nigeria. And part of the benefits of this is that you don't need to have any credit or to show any income, because if you're getting a loan in the US, you must be able to have you must have good credit, and you must be able to show that you make enough money to repay the loan. Now that's difficult because here we can the banks can gather documentation to show all those things. But if you're coming from a foreign country, if you're coming from Nigeria, it's hard to show that. So these type of loans don't require that. So it makes it very simple. You don't require a credit history. You don't require to show your income or anything like that. The way they cover that is you put a larger down payment down because it's risky to the bank in the sense that they don't know who you are, they don't know where you're coming from, and you don't even live in the country. So how they mitigate some of their risk is that you have a larger down payment. And the standard down payment starts from 25% of the house. So if you're buying a $200,000 house, for example, 25% would be 50,000. And I have an example below, but for now, it starts from 25% down. You can put down more. So the example Damola gave, we've had people who have had 400,000 that they were going to use to buy one house, but instead they took 200,000 and they split it into two and put 200,000 in each to buy two houses. That way they're putting 50% down on each house, but 25% down is the minimum. And the reason why I say it's the minimum is because of the way the loan is calculated. The reason why the banks don't need to verify your income, or how they get around it with the US regulations that they don't have to check your income, is that the house is supposed to be able to generate enough income to pay for itself. And what that means is, first, the house is bought as an investment property. The house must be bought as an investment property. But what happens when we are originating your loan is that an appraiser is somebody who goes out here to get the value of the house, but not only the value of the house, the potential rent that the house can generate. So it looks at all the houses in the area that are similar to the one that you are buying for your client and looks at what those rents can be, and it takes an average. So if the average for your house is $3,000 a month, that's the rent, then as long as the mortgage that you are getting is $3,000 or more, they say that that means that the house itself can generate the payment, and that's why they don't need to collect rent from you. So we say 25% down is the minimum. So sometimes 25% down, the mortgage that you have for that, sometimes the rent in the area, that covers that mortgage. Sometimes it doesn't. If the rent, say, the mortgage is $2,000 as an example, but the rents in that area are $1,800 or 1,800. Well, then you need to put down a little bit more than 25% to bring the mortgage down so that you're at 1,800. Okay, so that's the way that it's calculated. But it starts from a minimum of 25% down. But usually we tell people to plan for about 30%, 35%, just to make sure that your mortgage payment is less than the rents in that area. What do you need to show? You only need to show, your passport. Yeah, you only need to show your passport. You need to have a current address in your country of origin, and you need to show bank statements, 2 months bank statements of any funds that you're using. Now, the funds can be in a Nigerian account or an account anywhere else. We'll convert that to US currency in order to qualify. However, please note that money has to be moved. You must have a US account in order to be able to close. So even though we can start the process with showing your accounts in Nigeria or whichever country, the monies have to be moved over to the US, and you must have a US account because the banks pull out the monthly mortgage. It's called ACH. It's pulled out automatically. So you don't have to be the one going and paying all the time. It's an automatic deduction from the account, and they can only do that from a US account. So with all the banks that participate in these programs, that is a standard rule that you must have a US account here for them to be able to pull out the money. But other than that, that's really all. A copy of your passport, an address of your home country, and sometimes they'll ask for utilities or something, a light bill, electric bill, or something just to prove your address in your country. They don't always do that these days, so I think that's something that's going away. Um, and then, of course, 2 months bank statements. Can we go to the next slide? Yeah. So typically, as people ask, what kind of rates do these loans have? They range. They range based on how much you're putting down. They range on the type of house that you are buying. And they range from bank to bank. So our job is to find you, there are many banks that say they have these programs. There are several that we use that have been good, that have delivered, because we've closed this loan for these type of loans for many people. But average, I'll say they start around 7.5% and go up from there. But rates in America change all the time. So it's just a range. Whenever it is that you're buying, we'll see what the rates are at that point in time. It's important to note you can also buy down a rate, so no matter what rates are, you can pay extra to bring the rate down if you want. It's not always recommended because, sometimes it's expensive and not worth it. But those are the discussions we have with your client to help them see what is, most expedient for them, in order to get the best mortgage. These loans typically have what is called a prepayment penalty. They know, especially with Nigerians, they don't keep these loans for 30 years. These are 30-year mortgages, but they know that they don't keep them for 30 years. And that's the only way they make money, if the loan is kept for a long period of time. So at least they want you to hold on to it for a little bit. So the typical standard term is 5 years. They want you to hold it for 5 years. But if you have someone that says, no, I actually only need this for 2 years, I'm going to pay it off, then the loan can be structured as a 2-year with a 2-year prepay. So those are standard things that again will be discussed with your buyer at that time. That's something that we always ask. Do you plan to keep this for a long time? Or are you planning to pay it off when in the next 2 to 3 years? So based on that, we can adjust that. But if there's no discussion on that, the standard rates and everything is based on a 5-year prepayment penalty. Okay. Now, in terms of cost to close, they usually range anywhere from 5 to 6% in terms of how much you need to bring, to closing. What are those what are those what is entailed in that? There's a lot entailed in that. When you're closing on a loan here, you have to pay yeah, let's stay on this page for now. You have to pay, for the underwriting of the loan. You have to pay for an appraisal of the house. You have to pay for the attorney that's going to close the loan. They get you title insurance and a whole bunch of other things that they do. You also have to pay for escrows, taxes, that's your taxes and home insurance. There's a whole plethora of things that have to be paid for. Some of them are just for getting the loan. Some of them are for yourself, or for your buyer rather, because here you have to get homeowners insurance on any house you're going to buy. So your buyer will get that, and it's all included. This estimate is included in that we know he's going to have to get that, or he or she will have to get that. So just roughly, this is a high level discussion for you guys to have an idea when you're talking to your clients. If they say, "Oh, how much would it cost me to buy a house in the United States?" Well, you can tell them, 25 to 35% of a purchase price, or and also budget for 5 to 6% of the purchase price in terms of closing costs or more. And to give you an example, Jessica, let's go to the next slide. I just use this example here of a $300,000 purchase. So if you're buying, let's say your client is buying a $300,000 house and they decide to put down 30%. So that would be $90,000. And if you have the other costs, let's say in this case, the costs are just 3.5% or so, that's 10,500. Okay. So and the interest rate we're using in this example is 7.5%. So the total cash outlay would be 100,000, 100,500. And what the principal and what the monthly payments would be. So, the loan amount is only 210,000 because they put down 90,000. So the principal and interest at 7.5% is $1,468, right? That's the principal and interest. Now you have to get home insurance, like I mentioned. That is something your client will get. What the bank does is whatever your client gets, we take that and we divide it by 12, and they add it to the mortgage every month, because the bank will then pay it for you every year. So this example, I'm just using $175. What they get might be less, or they may opt to get one that's more, but that's an approximate price that works in today's market. So that's $175. Then each property in the United States has what is called property tax. That is regulated by the government on every house. So even if you don't have a mortgage on it, you have to pay property taxes every year. So again, we can only approximate because every house is different. But for a $300,000 house, depending on the county, I'm in Georgia. So depending on the county here, it's about, that would be probably about 36 or 3,600 a year, which is $300 a month. So that is added. So when you add those three numbers together, in this example, your payment would be around $1,943. So let's just round that up to $2,000. So your payment would be around $2,000 on this house. So when the appraiser goes out and is appraising this house, they look for all the rents in that area. And as long as the rents in that area for a house similar to yours, or if there's already a tenant in the house, is $2,000 or more, the loan will be approved. That's the way they avoid having to check for your income or anything like that. Okay. And just lastly, this applies to purchases. It also applies to cash outs. There's some people who have already bought houses that own them here free and clear. They can pull out money up to 65% of the value of the house in order to, use for whatever they want. I've had people pull out money to buy other houses or pull out money for some other projects that they have around the world. So you can do that. In terms of closing, typically you have to close in person. You must close in person, but you don't have to close in the United States. These loans allow you to close at a U.S. embassy in any country, whether it's in Nigeria or wherever they are at the point in time. We've had people close in Gambia, in Canada, wherever they are, at a U.S. embassy if they're not able to come to the United States. Now, most people come here, but at the odd chance they're not able to travel, they can do it over there. Once again, foreign currencies must be converted to US dollars, and you have to have a US bank account for the loan to be approved. So, in a nutshell, that's the high level of these type of loans. We've done many of them. Many people have taken advantage of this program, so it's available to your clients as well. So I'm open if you have any
Thank you, Tom.
questions. Or I don't know if Damola
Yes,
wants questions reserved for
yes.
later. Yeah.
If you guys have questions, I don't want us to hold talks too long. He's a very busy man.
Yeah.
So if you guys have questions, please feel free to ask my friend and brother Talks. He'll be glad to answer. He's been doing this for many, many years, so he's very experienced and he can answer your questions. And the question should pertain mostly to the financing aspect of the deal. So please feel free to ask while what he has explained so far. Feel free. Thank you.
Okay, well done, Mr. Toth. Thank you very much. That was very clear.
Sure.
So I have two questions. And the
Yeah.
first one is, what's the commission structure like for someone that closed a deal as a realtor? And secondly, can we get this document so we can also go through it on our own to have more information about it? Thank you.
Okay.
That's it.
Sure. So in terms of the commission structure, I think that's what Damola is going to go
Right.
over with you. On
Over with
the
you. Yeah.
mortgage side of things, there's no commission. We get paid by the bank, and it's just to help the buyer get their get their property. So the bank pays us uh, for bringing the clients to them and helping originate the loan. In terms of the PowerPoint, yes, Damola has it, and if I'm sure they can
All
easily
right.
get that over to you.
This recording we made available for you guys to go over and over again. Is there a specific reason you wanted the PowerPoint? Did you want to present it to somebody, or why did you request the PowerPoint? I'm just curious.
Well, I just want to read through again
Okay,
to get, to be
I
really
see.
sure of the information I heard.
Okay,
Right.
sure, sure. Yeah,
That's
that
just
makes
it.
sense. Okay, no problem. Okay, let me take some other questions. Gloria, please go ahead and ask your question.
Okay, good afternoon, everyone. This is
Good
Gloria
afternoon.
from Lagos. Yeah, I
Gloria.
Thanks
want
for
to
joining us.
would there
Yeah.
be okay, it's not concerning the loan aspects. Just my own question is, would there be an agreement between us, the realtor, and you before we start the sale? That's my question.
Yes, yes, we're going to go over. So we're going to do another presentation that will go over how we operate. I wanted us to cover everything that pertains to the financing. Does anybody have a question that pertains to the financing aspect of the deal before I release talks?
Yes,
Jennifer, do you have a
sir.
question about the
I
financing
have question.
aspect?
I have a
Okay,
question.
please, yes, go on, please.
Okay, good evening, everyone.
Good evening.
My name is Jennifer Okonkwo. Please, Mr. Toes, thank you very much for what you said so far. So, when we are talking about, I think breaking down the 25%, 30%, I didn't really understand because I think you mentioned about giving the client paying 35% or 25% to the bank. Then so I didn't want to understand because it got me confused at
Sorry.
that place.
Okay.
Yes.
So basically, whenever you buy a house here, the bank lends a portion of the amount and you have to bring a portion of the amount. The bank never lends 100%. Even on the loans that are for Americans here, they don't lend 100%. So when those percentages, so if the house, like the example I gave, if the house is $300,000, the bank will give 210 and your buyer will bring 90,000 in this example to make 300,000. Okay, so like I said, the minimum can be 25%. The example I gave, I just used 30. So maybe that's what may have thrown you off. But I said the minimum to qualify is 25%. That's the minimum for this loan. And you can put down more. You can put down 30, 40, 50, whatever. But basically, what is happening is you are putting down a portion of your buyer is putting down a portion of the price of the house, while the bank will now give the rest. So in the example I gave, the 300,000, the loan that the buyer is getting from the bank is not 300,000. The loan is only 210. They are putting down 90,000, so they only owe 210,000. That's what they're going to pay off. Does that make sense?
Yes, sir, it does. I'm trying to ask, I think you break down about 300,000 they charge, I think taxes or something like that, that US charge on housing, something
Mhm.
stuff like that. Then I think
Yes.
and at the end you mentioned about paying $2,000 every month.
Yes. Yes.
Yes, I want to understand that part, like the breakdown that you gave in that aspect.
Yes. Jessica, can we pull up that slide once again? Is it possible to do that so I can just show it? Yes, it was the slide just before this one. Yes. So basically, again, this was that example. So the again, a $300,000 house, the down payment which your buyer would bring would 30% in this case. I mean, I could have used 25%, but for this example, we're using 30%, is 90,000. And then other costs, roughly, I just estimated that those differ based on the house you're buying, the attorney you're using. So we can only give an approximate, right? So I'm using 3.5% here, which is 10,500. And the interest rate is 7.5%. So in terms of the cash, in this example that your buyer is bringing, it's 100,500. That's his own share to buy this house. The bank's share is 210. What he's borrowing is 210,000. That's the 300,000 minus the 90,000 that the buyer puts down. So 210. So that 210, the mortgage to pay it back, your mortgage payment, the monthly payment to repay that 210 back is what is broken down on the right-hand side of this screen, of this worksheet. So the first part is it's made up of four things. The first two combined together is your principal and your interest. That's the $1,468. And the way they get that is very simple. It's just the 210,000 multiplied by the interest rate and amortized. That's the word the bank uses, stretched out over 30 years. So if you pay that 1468 every month for 30 years, you will pay your interest and you'll pay your principal and pay back the $210,000 loan. So that's what the principal and interest is. The insurance, every house here, when you buy a house, it must have insurance. This insurance is just in case anything were to happen to the house. If the house were to burn down, our houses here in the US are mostly built with, wood compared to Nigeria. And yes, they do burn down. So if they were to burn down, you must have insurance that will give you the money to replace the house. So no bank will give you a loan unless you have insurance. So that's why average insurance there right now is about 2,100 or so. That's why I have that $175 there. So they add that to your payment because they want to make sure that you paid, because there are lots of people who don't get insurance, even though they're supposed to. And then when something happens, there's no insurance to replace the house. So because the bank is lending you money to buy this house, the only way they can get their money back if something happens is if you have insurance. So they make you have that insurance and they add it there to pay it for you. Then the fourth item is the taxes. So the principal and interest are the first two. The insurance is the third item. And then the fourth item is the tax. It's a government thing here. Every house in the United States has to pay property taxes. They pay it for the roads, for the schools, for everything. And it's all different. Every house is different. It's based on their size and everything. So in this example, I just took an average of what that money would be. It would be, and I used $300. Okay, so when you add those four things together, that's how you have a total monthly payment of well, in this case, 1,943. That's what you will pay to the bank every month until you pay off the loan. Is that clearer now?
Yes, sir, it's clear. Thank you
Okay,
so much.
good. No problem. You're welcome.
Right. Fatima Adeboye, please go ahead, please.
Good afternoon.
Good afternoon.
Yeah, my name is Akobiolua from Lion. It's because I had issue. That's why I used my mail to join.
Okay, nice to meet you.
So my question
Okay.
is, thank you, sir. So my question is that after the 25 or 30% payment, can they take charge of the house? Can they start living there? That's
Can
my question.
can who start doing that? The buyer?
The, the buyer, yeah.
Yes,
After
technically
the
these.
first payment,
Yes, yes. I
living there.
mean, yeah, technically these houses are bought as investment properties, and yes, once they get the mortgage, then they get the keys to the house. So at that point, they
Okay.
do whatever they want with the house. A
Yeah.
lot of people
That's
they
closing.
rent it
Yeah.
out to other people, and stuff like that. But so what happens is after Damola and his group find you the house, they come to us, we help with the closing of the loan. Once on the day we close the loan, there's a day that all the documents are signed, where the money is paid and the down payment is paid, everything is paid, the seller is paid, the buyer receives their keys that day. From that day, they own the house and they can pretty much do whatever they want with it.
Okay. My second question is, for how long is it going to take to close, for you to fund them? For how
That's a
long
that's a
is it
good
going to take?
question. That's a good question. It usually takes about 30 days. 30, depending on how quickly we can get any information that we need, but it typically takes around 30 days. 30 days is a good number. It used to take like 45, but these days we pretty much get them done in about 30 days.
Okay. Thank you.
Folks, I don't know if you spoke about seasoning the funds, but that may be an important factor for them to know as well, for the funds to be seasoned in an account.
Things have, well, if funds, that's a very good point. Yeah, if funds are coming from Nigeria, they do need to be seasoned in an account here for at least now it's pretty much gone down to about 15 days. It used to be 2 months, but they've reduced that now with some of the banks that we use. If the funds are already in the US, even if you're moving them from one account to another, it doesn't have to be seasoned. So, but if you're moving it from Nigeria, you want to plan for when it gets here to be in the bank for about 15 days before we can use it. So if someone is planning to buy a house here, they're getting ready for that, and they're going to be moving money, it's best to tell them, hey, start moving it now. I mean, you're moving it to your own account in the US, so it's safe, but start moving your funds, the sooner the better.
Okay.
Thank you so much, sir. Does anybody else have any question as it pertains the loan structure, the loan aspect of this um, presentation? Yes, Iberi Sam, I think you say you have a question. Please go ahead.
Good evening, everybody from Nigeria. Thank you, Coach. Thank you, Coach. Thank you, everybody. My question is, if you have clients living in the US, um, hope you will be properly taken care of in terms of site
Sorry,
inspection.
sorry, madam. Tooks, can you hear properly? The audio is a bit low.
Yeah, I'm trying to pick it up. I think she mentioned if you have family living in the US, I think.
If you can
If
increase
you have
your,
a
yeah,
client,
go on, please. Thanks.
can you hear me now?
Yeah, that's better.
It's a bit
Yes.
better.
All right. Okay. I said if you have a client, me personally, if I put out an advert there, I'm able to get a client living over there. So my question is, can that client meet two people there and he'll be well taken care of? And the deal can be closed through you people over there.
Uh,
Tooks,
yes. I
do you
mean,
want to
if
take
it's
this or should I take it? Okay, go
yeah,
on.
well, I was just going to say if it's the real estate portion, they'll work with you. So yeah, go ahead.
Um,
Yes.
Yeah,
Yes,
so the
I'm
thing is this, the person has to be a foreign national to qualify for this kind of loan. There are other kinds of loans that they can qualify for if they are resident in the United States that we didn't go over today. But this specific kind of financing only applies to foreign nationals. So investors who don't have any residency, any citizenship in America. So the question we have for you is that person a US resident or not?
Sure, yes. Because if I'm putting out, if I'm drafting my advert, I should be positioning it to people who decide over there, and they should be
No, no,
residential.
no, no, you can't do that.
Yeah.
We're going to go over the rules. You can't advertise. You have to be licensed to advertise in America. If you're not licensed, you cannot do that. It's illegal in the United States. So you cannot put up an ad being in Nigeria saying you're selling a house in America. They will think you're doing a fraudulent activity. That's why you're partnering with us. We are licensed in just 2 states. Atlanta, Georgia, Charlotte, North Carolina. So you just can't go and put up a blanket ad and say you want to help people buy a house in the US. It won't work. Okay. I hope that
Okay,
clarifies your question.
all right.
So you're better off doing your ad for Nigerians in Nigeria
Yeah,
that
I
may
will do it with
qualify
uh,
for what you're looking for. Okay.
uh,
Fatima, you have a question, please. Go on.
you are, I think you have answered. It's about the adverts.
Yes,
Because
we're going to
I
go
have
over that.
started posting
Okay.
on Instagram and all that. So I hope there is no problem. I've
Say that
been
one more
doing that
time.
on Instagram.
So
I
we
said it's about the adverts
Okay.
that you spoke about.
That's why we put together this orientation so that we can tell you the rules. You cannot put up blanket advert that you are selling a house in America. You have to go through a company that's licensed in the US. So we're going to go over those rules. And if you
But
don't
I've
mind, if you
started
just send,
on Instagram.
can you
Hmm.
send Jessica the kind of ad you have going on? Can I look over it? Is that okay? So I can better guide you,
Okay, it's just
please.
the picture they sent, Jessica sent to us on the group. I posted on
Yes.
Instagram and
But
people
who
have
did you put is selling that
followers.
house? Who did you
You
put as a
said?
seller? Is it your company that is selling the house? Who did you put as the seller of the house?
I I
Or who is listing the house
I
for
did not
sale?
post. I just posted the details she sent
Okay.
to us.
Okay, we'll go
I
over
used the
this in great
details she
detail.
sent.
We'll go
Or
over
maybe
this in great detail.
after everything I will send my Instagram
Yes,
handle so that
just
you can
send
go
that.
through.
Yeah, please kindly hold on any ads till we go over some information. Does anybody else have a
Ah,
question for talks on the financing aspect of the deal? Does anybody else have a question for talks on the finance? I think Talks has done a very good job answering our questions. Talks is up to you. You can stay, you can go. I know you're a busy guy, but we'll take over from here. Thank you so much for
Okay.
giving us a breakdown of the financing
Okay.
aspect.
My
And
pleasure.
thank you so very much. So that's who you'll be working with when you refer a client to us. We're going to send them first to Talks' company. It's called Evergreen Anchor. And because they have to get something called a pre-approval letter or a pre-qualification letter. Maybe just talk about that briefly, Talks. And before we can begin to help them look for a property. So before you go, just give us a bit
Yes,
rundown about that.
a pre-approval, thank you. A pre-approval letter is just a letter from us that we give to Damola and the team that they will present to any realtor on the other side of the house that they're looking to buy for your client. And what that letter is showing is that we have seen your client. We've seen, in this case, we don't have to see that much, but we do need to see the copy of the passport, like we talked about, and also the bank statements to show that the funds are available. It's based on that letter that, the other realtor will know that Damola is serious, that he's got a serious client that is ready to buy. And if you're going to make an offer and sometimes even to view the house that you want to buy, they require that pre-approval letter. So typically when you send someone to Damola, he'll reach out to me so that I can get that documentation, make sure that I have it here, because they will call me to verify. Those realtors will call me and say, hey, we have a client from Luvanex who is looking to buy this house. Have you looked at their paperwork? And we can't lie here. We have to tell them, yes, we have, or no, we haven't. So that's what will happen. We'll get those documents. We'll look at the documents, make sure everything is okay. Then we'll generate a pre-approval letter to give to Damola. So that's what the pre-approval letter is.
Exactly.
Yeah.
So
Okay,
so
the
that
name of
covers
your
that.
company
Yeah.
once
Evergreen Anchor Capital, LLC.
ever.
Evergreen. Yes. Evergreen Anchor Capital.
Yes. And just so you know, what we do is we don't touch your client's down payment. They don't come to us. They don't go to Toxis company either. It is wired from Nigeria to the attorney's office, the closing attorney's office, or from their bank account in the US to the closing attorney's office in the US. They don't send us any funds into our personal accounts, our company accounts. So everything there's full transparency. Nobody is sending anybody any monies that they have to be worried about. It's going to an attorney, and that attorney is also licensed. So everybody has a license here to protect. They won't just misdo or mismanage funds or whatever it is. So your clients are in good hands. Okay. All right. Thank you so much, Tokes.
All right.
Thank you so
Thank
so
you.
very much.
All right.
Yeah.
Take care.